Welcome to USAWatchdog.com. I'm Greg Hunter. Today we have back with us Eric Sprott, fund manager at Sprott Asset Management. Eric Sprott, thank you for joining us today on USA Watchdog.
Greg, always a pleasure because your website is very important to people who care about what's really going on in the world, and I compliment you on all the great interviews you do.
Well, thank you very much. Listen, part of the reason why we have you on is because of your upcoming roundtable tomorrow. That's Tuesday with Rick Rule, the two top guys at the company, two very smart guys. I was asking your secretary, who else is going to be? Just Eric and Rick. I thought, two smart guys. That's good that you're out there, and I know you want to talk about this golden opportunity that you've written about. There is a golden opportunity, and all the stars are aligning in a good way. It's been a rough couple of years for you and your fund. But the stars are, well, and not because you made bad calls. I mean, the manipulation is crazyville. But that's what you got to talk about in part with this roundtable, are you not?
Absolutely. Well, that's really one of the reasons I think it looks so exciting here. There's a whole bunch of things going on. Well, first of all, Greg, to go back, I've always believed there's more demand than supply. I believe that for the last 14 years. I've documented it. I'm suggesting that the Western central banks have very little gold left, if any. I think the whole decline in the gold price in 2013 was in fact the cause liquidation of gold out of the ETFs to supply some of that shortfall. And so I think manipulation and the relief from manipulation and the ongoing demand being well in excess of supply will power gold higher. And perhaps I could comment on the manipulation because we seem to get more and more evidence of it all the time. There was, first of all, the German equivalent to the SEC saying, possible manipulation of gold would be worse than LIBOR. And I think worse is a very important word here because there can't be more money involved as LIBOR is way, way bigger than gold. But I think worse means the egregiousness of the price decline. Furthermore, we had another group come out called Fideres. There was an article on the Financial Times, which got pulled very quickly, but it's available on lots of websites now, where they said the LVMA fixing by their work was manipulated 50% of the time. We've had a professor from New York University come out recently and say that based on his mathematical work that the prices are manipulated. And all our work says it has to be manipulated. So one of the charts we had in this recent write-up is to show what happened to gold last year. And we use the premise that you only manipulate for personal gain because, of course, you take on great risk. And the personal gain, of course, is in bonuses. And I find it highly instructive that the price of gold hit lows in basically the last trading day of June and the last trading day of December when we'd all calculate the bounty for the year and the bonuses would be calculated. And, of course, ever since the end of December, the price has gone up in a rather unusual for us fashion, right? We've had some days done up 11 days in a row, and it's been a totally different market here so far in 14.
Well, just to add to the fuels of this manipulation thing, because anytime in the last few years, you brought up manipulation, no manipulation, which is totally bogus. I mean, everything is manipulated, including the gold market in a big way. And now Bloomberg is out. They were out late last night with this. Bloomberg, I think, has posted this study. It says study signals a decade of manipulation. So Bloomberg is now also backing you up. It's not an article. Maybe that was the study that was pulled off of Financial Times, but Bloomberg.
No, it's a separate study, Greg. It's a separate study. I think it's done by New York University, if I'm not mistaken.
Well, there's another study, and I mean, when are the regulators going to come in and say, hey, enough is enough? I guess to your point, when they run out of gold, how close are they to just saying, that's it, we cannot or will not deliver any more gold?
Well, we might be there, Greg, when you think back to, the German situation where they got all of 5 tons from the U.S. Treasury last year. I mean, isn't that a de facto? We're not delivering the gold. I mean,
yes.
I take that as that kind of, it's such tokenism as to the extreme. So I have always thought that there would be a tightness, whether it shows up in the COMEX one day or the fact that premiums blow out in China because they can't get delivery. We're going to see that because when you study the data, for example, the exports into China, which we now have a new release on that, the Swiss for the first time since 1980 actually published in the month of January exactly where their gold went. And most of it went to Hong Kong, but they also reported some went directly into China. It was about 15% of the gold that went to China is now coming directly into China. So none of us have ever had that data before. And of course, because the Chinese don't supply the data. But now we're finding out, as I've always thought, that lots of gold goes into China, directly to China, not through Hong Kong. But the stuff that goes through Hong Kong is already humongous, let alone the direct supply that they're getting. So the supply-demand numbers get better every day.
Well, let's take a look at one of silver, because a lot of people say, "Wow, you had Eric Sprott on. You didn't ask him about silver." Is silver the crazy skyrocketing twin brother of gold that'll outperform gold, or will it still be languishing?
Well, all I can say about silver is it's always been more volatile than gold. I think it's safe to say that every time that gold's gone up, silver's gone up in some multiple of that. And I wouldn't expect any difference going forward here.
So you think you're bullish for silver and for gold?
Well, my targets, as I've expressed many times, is that gold will exceed 2,000 this year, and that silver will exceed its previous high of $50 this year.
This year, coming up. Let's talk about this linear trend. Where should it be right now? I mean, you brought up this idea of a linear trend, and with all the price suppression, there you go. There you go. With all this price suppression, where should gold and silver be on this linear trend line right now?
On the linear trend line, it should be $2,100 right now. And of course, if you take it to the end of the year, you're probably more like $2,300 because it appreciates as appreciated about 13 to 15% every year. So if you got back to where it should be, i.e. 2,100, throw on another 15%. I mean, you could be looking at $2,400 by the end of the year.
And let's talk about China a little bit. I mean, Jim Rickards was out this week, and he wrote, and I got to read this to you. I'm just going to read you his quote, get your comment on it, because you brought up China. He says that investors are in for a rude awakening when they realize how much of the China story is false and how quickly it can unravel. Rickards says, he's the guy that wrote Currency Wars, and they bring him in, the Pentagon brings him in for, financial war games. He says China is on the verge of financial collapse of unprecedented magnitude. How does that play in with the gold story?
Well, of course, anytime you have a financial collapse, the last place you want your money is in a levered bank and or a government bond. And for that matter, most stocks. So what's left when you exclude those categories, gold is the place you turn. And to Jim's point, I mean, when I reflect back, for example, on '08, when Chinese GDP was about $4 trillion, they announced sort of an economic stimulus of $600 million and bank loans of $2 trillion in a $4 trillion economy. It was so gargantuan as to be ridiculous, and the lending is still ridiculous vis-a-vis their GDP. So they're more levered in their total loan obligations than anybody is. Thank God, as a country, they actually have some significant foreign exchange reserves. But on a corporate debt basis, it is one of the most egregious leverage ratios out there. And of course, you can get this domino kind of effect. We've already seen a couple of these so-called trusts that should have folded, that were bailed out. But sooner or later, we're going to have to let a couple of them go, and the question is whether we end up with a domino effect. But anytime there's financial uncertainty, that's what gold thrives on. And I think the Chinese have obviously in the last 2 years, when they've taken their imports from Hong Kong from 100 tons to 1,100 tons, somebody's spoken over there. I mean, it's gone up by 1,000% in 2 years. So I think it's going to be the go-to investment in China.
Is that their plan B? They know they have all this leverage. They know what's coming down the pipe. They're going to have a whole card, and that's gold. Is that your assessment?
Well, I think so. And I think the People's Bank of China has been a big buyer of gold and has done so for many years, particularly last year. I think when we look at what China did in December, I think they sold is either 47 or 49 billion of U.S. treasuries in 1 month. It's a statement, right? That's a lot of selling that took place. And I think that they know, anybody who listens to your show or has their mind open knows that the obligations of the U.S. government cannot be met. We all know they won't be met. It's just we're all waiting for the Detroit to happen. We already know they're broke. It's just a question when you finally can't write that final check or pay somebody's medical bill or the Social Security payment or the government pension plans. We all know the obligations are so far in excess of the cash generating capacity of the government. Like the known obligation, you've had Lawrence Potnikoff on there. I think the present value is like 85 trillion. The income of this guy who's got these 85 trillion of obligations is 3 trillion a year, and he spends 4 trillion a year. There's not a hope in this world that they're going to meet those obligations to anybody who has an iota of thought process.
Could China, trouble in China, financial trouble and implosion that Rickards is talking about, could it be you talked about a daisy chain, could it take down Japan, the U.S., Europe, boom, 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 just like that?
Well,
will it do that?
Well, sure, it's been the growth engine for economies for the last 20 years probably, right? And when you look at the growth in China, which is now has significant GDP, if there was no growth in China, we would all have been in the dumpster long ago. Not that we weren't in the financial dumpster. I'm talking about the economic dumpster. And of course, the question is, Greg, whether, for example, if there is some kind of implosion, there's a little shake-up in the Western markets, do the central banks come in again with a whole tranche of buying, which I suspect they probably will. And of course, then you would end up with this hyperinflation thesis, which seems to be gaining some precedence these days. We have more and more people suggesting we could have hyperinflation. And as I see what's going on, we have this taper in the U.S., but you keep feeling this movement in Europe where they keep talking about, unsterilized bond purchases. You kind of feel that coming here. I suspect that the ECB is going to be the next guy who comes into this market, and he's the buyer of all the bonds for the world for a while.
My final little sphere of questions here is I got to talk about the Ukraine. You're managing $8 billion. You have to look at the global picture. What does the Ukraine situation tell you? What is your fear about Ukraine?
Well, of course, it would be the same as everyone else's fear. That there's two fears. One, the biggest fear would be some kind of war, which would be just devastating for everybody. The other fear is that there could be a financial domino fall away from this, in the sense that, perhaps the banks in the Ukraine, which are already facing tremendous demands on their deposits, fail, and because somebody else has invested in that bank, that they end up with a problem. So there's two things to worry about: the financial difficulties coming out of it. Of course, God forbid we have some kind of war.
And then what about the Syria question? Because that's not really over yet either. And the other reason why the West didn't take over Syria like they, Wesley Clark was on years ago saying, hey, here are the countries we're going to knock out. And, one of them was Syria. One of them was Libya, gone, check. One of them was Syria. But Russia basically blocked that. They had their Navy, their Air Force, their anti-aircraft missiles. That's the reason why they didn't fly sorties. Is a Syria question. And now they're having, the Israelis are doing bombing on the border of Syria, against Hezbollah, and they're vowing to strike back. I mean, I've never seen this kind of the possibility for war. And you're saying war would be a financial domino on top of it.
Well, there could be either one, right? But certainly the war would cause a financial domino. But we could have a financial domino without war in Ukraine, because there's a huge bank rush going on. People are taking deposits out. The currency's crashing. The ruble's crashing. It's shocking, Greg, when you think of all these currencies and how much they've gone down. And speaking of currencies, and I do want to talk about this, but I can tell you that, we've experienced a huge decline in the U.S. dollar on Friday. We're trading below 80 cents in the dollar. It fell, I'm sure, over 0.5% in one day. I have experts that I use their services that suggest it's going to 71, 72 very quickly. And it predicted this kind of breach of support at 80. And of course, if it goes down there, it's very gold positive in terms of pricing in the international market, because it'd be a 10% decline with an automatic 10% increase in the price of gold, other things being equal. So, but to go back to, I don't specifically analyze Syria, but there's so many hotspots in the world, all of which could create problems. We have our own hotspot. We have an economy that's as weak as could be. We just revised down our fourth quarter GDP. The retail sales have been weak, housing sales have been weak, car sales are weak. There's no strength, and you've had many people on that have discussed that. The 99% just can't deal with the inflation that we're experiencing, which of course, as we all know, is well above 2%. So we have lots of problems out there. The only way I can possibly explain the market going up is the market is anticipating hyperinflation here. And of course, hyperinflation would be wonderful for precious metals going forward. They would be the number one winner.
And final thing, let's close and talk a little bit about your roundtable tomorrow. Thank you for the preview for USA Watchdog here. But you and Rick Rule tomorrow, March 4th. How do people get involved? You're going to talk a little bit more about what you talked about here. How do people get involved in this roundtable that you can people can attend online?
Sure. Well, they can go to our website and register. I think we've got around 5,000 registrants already. And there's a reason we're having this. And the reason we're having is the time is now. We think the time is now to get involved in this market. We've had a wonderful rally in gold. We've had a wonderful rally in silver. We've had a really even way more impressive rally in the stocks. And to think that the junior gold index, the junior gold stock index, off the bottom rallied as much as 55% in the first 7 weeks of the year suggests to me we're in a new bull market here. I can tell you I've been very active as a portfolio manager trying to get money into the sector. And it's not just me. We've seen lots of issues of other companies, big issues. So I think we've turned the corner on gold here. X manipulation, gold price goes up, stocks go up. And we thought, we want to communicate with people, particularly those holding our various trusts and some of our other funds, as to exactly how excited we are going forward here and urging them to partake in what should be the best performing group in the market.
There are some folks out there saying that the gold and silver rally we've seen so far in metal and in stocks is a sucker's rally. And you say?
Absolutely. Nothing could be further from the truth. All the data supports the precious metals prices going on, and most of the evidence coming out here now is suggesting there was manipulation. So I can't believe the dots have lined up the way we have, and all you got to do is connect them and realize, okay, now we've got the lid off gold here. Where could it go? I mean, you revert to the mean, you go to 2,100 without even hardly lifting a finger. So I think it's pretty clear what should happen going forward.
Eric Sprott, thank you so much for joining us today, and good luck with your roundtable tomorrow, Tuesday, March 4th. People can go on, Sprott.com. Is that right? That's your website, Sprott.com?
Absolutely.
Go on Sprott.com and register. Thank you, Eric Sprott, for joining us today on USAWatchdog.com.
Okay, Greg. My pleasure. Keep up the great work.